All right, let's talk about first-time home buyer programs as of May of 2026. So the first most overpowered thing that we have is the first-time home buyer savings account. The way it works is similar to a superpowered RRSP in the sense that you can contribute up to $8,000 a year from the moment that you open it to a total of $40,000. And you can let that money grow tax-free, not get taxed on the gains if you're pulling that money out to purchase your first home, and the $8,000 a year that you add gets deducted from your income the same way that a contribution to an RRSP would. The second so that's the first time homebuyer savings account. If you haven't opened one up already, it's probably a good idea to do so if you're planning on getting a home in the future. Number two, you have the ability to pull out money from your RRSP up to $60,000 and delay the amount of taxes that you have to pay. This one actually isn't that good and is probably not that recommended in the sense that you still have to pay back the taxes, but it's worth knowing about in the case if you're in a unique situation where you need more of a down payment. 3. Property transfer tax partial exemption. A reason I say partial exemption is because you get a 100% exemption for anything under $500,000 and a partial exemption on the remaining balance up to $835,000 and a sliding scale to $860,000. So for instance, the way property transfer tax works is it was introduced, fun fact, as a temporary measure and called the wealth and speculation tax to stop people from speculating on real estate. Newsflash, fast forward to 2026, it didn't work. It was introduced when the average price of a home was around $145,000 in March of 1987, and it's 1% on the first 100,000 and 2% on the remaining balance from 200,000 to 2 million, and over and above 2 million, it's 3%. So for instance, if you have a $700,000 property that you're purchasing and you're not a first-time home buyer, the total amount of property transfer tax you would regularly pay would be about $12,000. However, if you're a first-time home buyer, you get a 100% exemption on the first 500,000, and on the remaining amount, so the 200,000 that's left, you would pay 2%, so $4,000. So rather than pay $12,000 as a first-time home buyer, you would only pay $4,000. Next, if you're purchasing a first-time home and the value is under 1.1 million, for property transfer tax, you get a 100% exemption. So if you're purchasing a brand new home, no property transfer tax. Next, you have a GST exemption. Regularly, you pay a goods and services tax on any new property or any substantially renovated old property that can be considered a new property, and you would pay 5% on whatever the purchase price is. But if you're a first-time home buyer, you get an exemption on that amount. So if you're purchasing $1 million property, just to keep the number simple, you would pay $50,000. But if you're a first-time home buyer, the way it works is the developer will either bake it into the purchase price, and then you assign the first-time homebuyer credit to them, and then on the adjustment date, it gets adjusted down, or the notary would add it as a line item and then apply the credit instantly, so it's cash flow neutral in a way. So basically, you get an exemption from the 5% GST that a regular purchaser would have to pay, but as a first-time homebuyer, you wouldn't necessarily have to pay that amount. 4, a one-time tax credit. So basically, the tax credit is a total of $10,000, but because the tax rate on federal taxes is 15%, you would get a $1,500 tax credit the year that you purchase your first home if you owe enough in taxes. And if you're qualifying for a mortgage and purchasing a property in Vancouver, chances are that you will get that $1,500 one-time tax credit applied against the tax amount owing on your statement. However, I'm not an accountant, confirm the details, though in all likelihood, you would qualify for that if you are a first-time home buyer and you owe enough in taxes. So to summarize, you have the first-time home buyer savings account, which if, as a first-time home buyer, if you're looking to purchase something in the next few years, it's a good idea to open up. 2, property transfer tax exemption, up to $835,000, with the full exemption being under $500,000. 3, no GST on first-time purchases, and then 4, the one-time federal tax credit. And then for PTT If you're looking to purchase a new home, you also don't pay that if it's under 1.1 million. So those are all the programs available to you as a first-time home buyer as of May of 2026. If you're a first-time home buyer looking and you would like more information, or you have specific questions about property that you might be interested in, I'll leave my contact information in the description below. You can contact me via email, my website, or my number. And if you would like to see more videos like this, hit the subscribe button. Thanks for listening.